Hi, everybody. This is Seth Martin, and welcome to the Middle Class Investor this week. Today's Sunday, March 22nd, and we had an up week in the market to try to counteract some of that selling from last week, and we had a higher low, and so the trend is likely to continue with a higher high up into this area here. I did add this. You can see this orange wedge here. I added this, and so it looks like what the market's trying to do is it's wedging back and forth in between this in this tightening zone. And I've told you about the rules before. The rules are it corrects the whole thing down to this low if it breaks to the bottom. So we'll look for that to happen. It doesn't mean it has to happen, as we saw in that longer wedge. Although these shorter wedges tend to work out more often. As far as that long-term wedge that we were looking at a long time ago, I've really never seen one that long, so I didn't know exactly what to expect from that. But it was on the chart, so we were talking about it. Yeah, so I'm looking for the market next week to come up into this 2150 area. And probably peter out and start rolling over back to the downside. So I don't know that I can't imagine that taking more than a week, but it could. I mean, as this down move here took 1, 2, 3 weeks, this next up move could take 3 weeks, I guess, too. But it looks like to me it'll probably finish this upcoming week. So let's look at the 10-year interest rate. We've yet to break this downtrend line, which tells me, that this movement down in interest rates might not be over. We didn't quite make it down to this support area from this previous low, so maybe that's where we're headed. I still think there's a lot of risk in interest rates when it begins to move. I think it's going to move very rapidly and catch a lot of people off guard. So if you've got those bond funds, just I guess hang on to them, but plan to do something with them, because you're not going to be holding those forever. The euro US dollar, the euro showed some strength last week, but then kind of sold off, and if you notice, didn't close. So you've heard me talk about this before, about closing above the high. So this right here is the high from the previous week, and it's easy to see there that we didn't close above that. So this could still be in a downtrend, and we could see lower euro even from here, which is really kind of strange, actually, because the euro has been selling off now for quite a while, and there seems to be no end in sight. So we had drawn this line. I got to go back a little further, like to a 20-year. But I drew this line off of these lows here, this low here, this low here, and oddly enough, it came down, pretty much touched it, and bounced. So it could be that that's going to hold, but it might not. So you might see the euro maybe chop a little bit here for a little while, and then make another move lower. Usually when you have a big sell-off like this, I mean, you get some sort of sideways movement for a while, because there's just so much selling here, and there's some back and forth until buyers and sellers kind of get that sorted out. Let's look real quick at Germany. Germany continues to be the best in the bad neighborhood, so to speak. We're watching this trend line here, and it continues to hold that trend line, and looks like it's making a new move higher. We've got this support, this resistance area up here, and that's the likely place for the MSCI Germany ETF, which is EWG. For those of you that can't see it right up here, it's EWG. Japan was in a trading range, broke out of that trading range, and is moving higher. We talked about Japan coming up into this area here. These are just technical analysis tenets, y'all. When you break out of a trading range, you tend to move the width of the trading range to the next target. So there's nothing magical about that. It's just technical analysis. We've done a program or two on technical analysis, and we might do another. I'm not sure how popular or unpopular that would be. So you can see here that the UK broke out of this channel. We had this pretty well-defined channel going upward. UK broke out, kind of ran up. I've got this box up here. We didn't quite get to it last time. Maybe the market gets to it this time, and then begins to push back down into this zone down here. The UK looks looks weaker than the U.S. market, and in fact, this could be the first move down on a trend change. This move right here. Let me zoom in a little bit and let's talk about this, because this is kind of what it looks like. The UK is really showing us something here. So you've got a move down, and then you've got kind of a choppy move back up. You can see it's kind of choppy. And where you draw this is really not. Maybe it goes like that. So if this is the first move down and this is the first correction into the first move down, that means it could mean that this next move is going to be significant and probably will not be held up by this support area. It might hold it temporarily, like hit it, bounce a little bit, kind of chop sideways and bounce a little higher, and then go even lower. But most likely, if this is a trend change, this support area is not going to hold for a higher high. What else do we have over here? We haven't looked at the global Dow in a while. It's weaker than the S&P 500, but looks like it wants to take off out of this little pattern we see here. I don't know if you can. Let me draw that here so y'all can see it. Once you look at markets more often, you start seeing these patterns a little easier. But you can see here, there's kind of a pattern right here, and at this moment in the pattern, it looks like it wants to go higher, but this could be kind of a bearish wedge because it has kind of an upward bias, in which case it would go lower. Sometimes these are very, you just don't know. You have to wait till it breaks out one side or the other. So you have to wait for, something that looks like this over here, or something that looks like that down here. And then you can pick a trend, pick a direction. When it's inside this pattern, it's hard to tell what direction it's gonna take, like the market kind of always is. But once it breaks out, it'll usually stay in the direction of the breakout. Let's look at volatility real quick. Volatility came in last week, obviously, with I don't know why the clickers. There we go. So it came in and broke our trend line. This is now. Let's see how many breaks we've had of this trend line. Quite a few now. So maybe we'll want to see volatility lower. We've had a close here below the trend line, a close here below the trend line, and now last week's close was below the trend line. So, the market's leaning pretty hard here on our trend line, and it may not hold for us. What I've been one of the things I've been watching, one of the things I've been looking at is like to decide whether it's time to go bullish or bearish. Kind of look at these. If you notice here, the market kind of touches this upper line. See here, and these are areas where I've kind of changed my bullish bias. So, well, not this one because this was the first one, but when it started hitting these Here's another one right here. When it started hitting these, after I drew the trend line, started using those to turn and go bullish. And then when I'm down here close to this trend line, I've got more of a bearish stance. So, but you can see this is narrowing. So again, anytime you have a narrowing of something that participants are using to decide their direction, you're eventually going to have a breakout one way or the other. You're going to have a move either to the upside, which would be pretty significant, or you're going to have a move to the downside. So I think what we're setting up for is a move in the market to the downside and volatility expansion. That's probably what we're setting up for. We're probably going to have some more highs in here, and then we're probably going to break this wedge and come down here to this 1800 area. That's my guess. But we want to look at the market taking out certain highs and then coming back and not making new highs before we really change our stance in something like an IRA or 401k, that type of instrument. Let's look at the US dollar. There's been, as I mentioned to you, there would be a lot of talk about the US dollar in the financial markets now that we've had this big run up in the dollar. Let me see where resistance might be. So we really don't have any more. We got resistance here at this 109 area. We could put that on there. But there's not a lot of well-defined resistance here on the chart, which tells me, the dollar is probably going to end up making new highs before it's all said and done. So right now the dollar looks a little tired. It's pulling back. We talked about it pulling back to this line here, this 92.88. Looks like it tried to do that. We'll probably get a little bounce, and then it'll pull back again. So you'll probably get something that looks like, this. And if I can draw a line here. And then back down to this 92.88, and then back up to the upside. So keep a lookout for that. That's probably, the dollar going really going much higher is going to be pretty negative for the market. I think it's generally perceived that, for somehow we've gotten into the mode of strong dollar is bad for the market. So I don't know how that happens, but that's where we are right now. If we look at gold, and I talked about this last week some. Whoops, get confused with my platforms here. Talked about this last week some, and we zoomed in on this this zone here, and we looked at how this high didn't take out. There was no down move that took out any of the previous highs. So if you were, let's say you weren't like this one, it came way down, but it still didn't take out that high, right? It didn't close above that high. This one didn't close above that high. But if you notice this one, now what's interesting here is it made a low. So the very candle that made a low also closed above this high. Oops. So now to me this is still a bullish signal. If I were trading gold, which I might take a position in next week, to me this is bullish. So what I'm expecting to happen now, that doesn't mean you might get I mean, you could get something, like a little pullback like this, and then, resume higher like so. It could be like that. But to me, this is a bullish signal in gold, and gold's likely to move higher and probably up to this resistance area around 1340, 1350. So if you like gold here, and it is at a higher low, this low is higher than this low. See that right there? And so to me, this is very bullish. So You could take a bullish position in gold here with the expectation of it rallying, pretty significantly. Now, let's talk about where we would be wrong. If you took a position here in gold, let's say gold pulled back. Let's say, let's just take a scenario here. Let's say gold did this next week, and you went ahead and bought somewhere between here and here, okay? And then the following week, it did this, okay? New low. Well, you would be out. Where you would get out would be right there at this price right here, okay? So that's where you would be wrong. Now, the reason this is a good trade is because, okay, you got in somewhere around here, and you got out right here. So that's I don't know how much risk that is, but let's just say it's from there to there, okay? That's the risk. But the reward in this case, we're expecting gold to go up to here. So the reward is from here to here. So you can see your reward is much, much greater than your risk. And these are the types of trades. This is how you want to enter the market if you can. You want to enter it with a very low opportunity to lose, and if you win with a big amount. Okay, so hopefully that helps people understand. Because some people go, well, how do you, why? Nobody can really predict the market. How do you trade? What are you supposed to do when you trade? Well, what you do is you look for low risk, high return trades, and some of them are going to be wrong. Okay, that's just the way it is. But the ones that are right are going to be right very large, and the ones that are wrong are going to be wrong very small. And over time, you'll make money. So it's not about being right or wrong. It's about entering trades that, when they move to the upside, they move very far, and when you lose, they move you're out on a very short with a very small loss. Okay. That's what trading is all about. It's not about guessing the direction of the market. There's an element of that, okay, because you have to do things like, if I get a signal before I break this low, there's just so much good information on this chart, good teaching here. So I'm going to zoom back in. But basically what you tell yourself is you say, look, here's the important low. If this continues to pull back and doesn't break this low, and I get a bullish signal like I have here, then that's a low risk trade for me. So you are picking the direction in that you're waiting for gold in this case to go back up. So you're guessing on the direction, but you have to pick one direction or the other to make a trade. I'm just suggesting that this is a really good trade because you're at a higher low. This high is higher than this low here. So, and you had a good pullback, and you got a bullish signal. So this is a good low risk opportunity to trade gold. That's all I'm saying. And what we'll do is in the coming weeks, we'll go back and visit this, okay? In fact, what I'll do, tell you what I'm going to do, just to keep us engaged in the opportunity, I'm going to go over here to our trade tab on Monday. So this is the Thinkorswim trading platform, and I'm going to go to GLD, and we're going to buy some GLD. Now, what I'm going to do is I'm going to look at I might look at the stock, which is $113-ish, $113.75, or I might look at the options. I haven't decided yet, but I will take a position in gold one way or the other in this IRA account. Let's see if there's anything in this. There's nothing in this IRA account, so we'll take a position in this IRA account, and we'll enter a position in gold. I'll just do it like it. I like to enter, around usually toward the end of the day. So I'll enter a position, and we'll watch gold and see if how this works out. Okay, and what I'll do is if it takes us out immediately, we'll be able to look at the loss And then if it takes us all the way to the upside, we'll be able to look at the gain, and I'll show you the difference between the loss and the gain. We'll estimate both of those, and we'll do a little math, and I'll show you about risk reward, because it's super important in financial markets, and it's super important for you to make money over the long haul. You want to keep your risk low, okay? Which is one of the things I'm trying to do here with this program, is help you decide when enough is enough in your IRA and you just want to step to the sidelines. Okay, that's part of what we're doing here. But those principles, even though it's in an IRA and you don't want to be trading your IRA all the time, they're the same principles you would use even in your IRA for an occasional trade. You can trade, an IRA 2 or 3 times a year, and that's maybe, all you want to do. Whereas a more active trader might use the same principles I just showed you, but make 2 or 3, 4, 5 trades a day. So that's the only way in which those are different. All right, everybody, that's about it for the week. I'll go ahead and get this uploaded, and we will keep an eye on the market closely for you. If you, if you would, let me go to my channel. Promote the YouTube channel. Send a link to your friends. I've been keeping the same thumbnail so that it's easy to find when you're looking for it. You can see here we only got 14 views, so we got a long way to go to get some more watchers. And I suspect when the market rolls over and starts going down, we'll probably get a few more viewers. Right now, people are kind of asleep. They're not really paying attention to this market. But when it starts taking money from them, they're going to start paying attention very closely. So keep that link handy and get ready to send it to your friends and family members. Okay? Thanks a lot, everybody. We'll see you next week. Take care. Bye-bye.